All right, let's pivot to our next guest. GP Theriot is one of the top mortgage guys in his area. He's also was a captain in the U.S. Army. He's a real estate expert. GP, it's so good to welcome you on our program.
Hey, thanks for having me. Glad to be here.
What are you seeing with concessions that sellers are making now to try and find buyers? This market has definitely kind of flipped upside down, hasn't it?
It has significantly, and I got to tell you, it is a buyer's market right now. So if you've been sitting on the fence, because I know there's a lot of bad media out there about rates are going up, the sky's falling, this is the time to get in because you've got all the leverage. I mean, these sellers right now, we're having some great success of where, the sellers are giving tons of seller concession, where the key piece is buying down the rate. And we're having really great success with the 2-1 buy down. And what that means is, let's say your start off rate is at 6.5%. Well, we can start off at a 2% improvement to 4.5% for the first year. And then it's going to go to 5.5% the second year, and then to 6.5% the third year. Obviously, the strategy on that is...
And that's the seller offering to pay that, right?
Correct. And the seller has to pay it. The seller has to pay that in order to qualify for that 2-1 buy down. So, I mean, we're having sellers literally, and here's the thing that I like to share with clients is they think, well, if it's been sitting on the market, GP, and let's just use the sales price, let's say a $450,000 home, it's sitting on the market, well, I'm going to lowball it. I want to go in, let's say at 400 or 425. And that mentality is they think that, well, my payment's going to be lower, but it's not going to make that big of an impact compared to going at full asking price at 450, do the 2-1 buy down at that 2% start off improvement rate, and the payment actually comes out less than lowballing it because it's dollar on dollar when you're buying the rate down.
Interesting. I know that obviously, there's different parts of the country that are feeling different things. Here in the Chicagoland area, Midwest, we didn't quite see the highs that some of the other parts of the country did. And as a result, I don't think we're quite seeing the brakes slam as hard as others. And so it does really matter, GP, kind of where you are to determine exactly what kind of market we're seeing right now.
It does, yeah, geographically located. I mean, when you're talking, West Coast to East Coast, even, I'm located here in Texas, in the Dallas Metroplex, the properties are it depends on the pocket, the area too. I mean, you'll see some decrease, but if it's priced right, I mean, it's selling it faster than some are. So it's definitely geographically located, does play a big part.
So what is some of the more unusual ways you've seen a seller try and entice a buyer?
Well, I know there was an article out there because it was sent to me about people are offering well, one is it's crazy. Now, this is not happening in the United States, but it's happening internationally. In New Zealand, somebody's offering a Tesla on top of it if you bought the home, which is just getting outrageous. Now, I wouldn't be surprised if it starts getting more sale out in California, West Coast, or even East Coast. Some of these crazy sellers might do something like that. I will say this. I did have a buyer, when it was reversed, offer to give their season tickets to the Dallas Cowboys here in Dallas. That's how crazy it was.
Whoa!
Yeah,
Cowboys tickets. Those are really worth something.
I guess you got to watch what you're talking, right?
Yeah, for sure. That's interesting. Yeah, and I imagine that's it. Although if I left my car in the garage, I don't think it would be much of an incentive for anyone. In fact, they'd probably tell me to leave it. What are some other unusual ways? You mentioned the buy down. Anything else out there that you're seeing from people, even like loan assumption, owner financing? There's a lot of different things out there.
There's tons. Yeah, that's one of the things, too. There are some assumable loans. Now, the ones that you can assume are government-owned loans, meaning if it's a VA home loan or an FHA home loan, you can actually assume that, which means you can take over that lower rate that they might have and just assume the loan over. Obviously there is owner financing too. A lot of these sellers might offer, look, just take over my note, again, assuming it, but might also offer some type of financing. So, there's all sorts of creative ways, but I got to tell you though, if you're working with the right real estate agent, the right lender, with these strategies of just going in and having them really help buy down the rate, because everything is rate driven. I think people think of rate because that's all you hear about. But when you see the numbers of what you're comfortable with, I mean, you've really got an upper hand. And get in now, because here's what's going to happen. When these rates do come down, and they will come down, will it be, this year, third quarter, fourth quarter? But when they do come down, when I say come down, let's say in the mid-5s to 5%, well, the floodgates are going to open back up, and everybody's going to want to jump back in the game, and that's going to drive the sell prices back up again. So right now, if you get in the market, if you're comfortable with the payment, and again, let's take advantage. Have these sellers, buy that rate down. Really take advantage of the seller concession.
Yeah, it's interesting stuff. And, I think a lot of people think that, everyone who wanted a home in the last couple of years got it. But the reality is the inventory was so tight that I don't think that is the case. I still think there's a lot of buyers out there that are now just on the sidelines that kind of missed the chance, or maybe they just weren't able to buy that home in those 2 years. They're ready to go.
Yeah, well, I think a lot has to do with that. I mean, inventory, people keep hearing, that rates are, at all-time high, and that puts a lot of fear in people. But also, it's just, I think it's about timing. People think they can time the market, so they're waiting to time it just right. You can't time this market. You don't know what these rates are doing. I mean, we've seen improvements in rates, but then a week later, we can see the rates go back up. There's just so much volatile right now in this market. And again, that's why in order to build that confidence, that's why it's critical to talk to a mortgage professional that really can go over the options of the buy down, how that buy down really works. And it's a huge, huge opportunity right now.
100%. GP Theriot, we appreciate your time. Thanks for joining us, okay?
Great. Thank you. Have a good evening.